After more than 6 months without uttering a single word, and following the sad news of the death of his inseparable friend and partner Charlie Munger, the greatest investor of all time, Warren Buffett, has broken his silence in his annual letter to Berkshire Hathaway investors. Many of us were eager to hear Buffett's opinion on the current market situation, a market that, as you know, has been steadily rising so far this year, with practically every week seeing new highs in different assets such as the S&P 500, the Magnificent Six, or even Bitcoin. Are we experiencing another stock market bubble? Should I invest now or wait for a correction? If you want to hear Warren Buffett's answer firsthand, don't miss this video, as I'll explain everything in under 10 minutes. 2024 has started with strong gains for many assets. The two benchmark indices in the United States, the Nasdaq and the S&P 500, have already seen gains of nearly 10%. Some of the major companies comprising these indices, such as Meta Platforms and Nvidia, have accumulated returns of 44% and 88% respectively. And let's not forget about Bitcoin, which has surpassed the $100,000 mark this week. Are these gains normal, or are we experiencing a moment of extreme euphoria and bubble in many of these assets? Well, my opinion will come a little later in this video, but first let's hear what Buffett has to say about the future of Berkshire Hathaway and the current market situation. Buffett's annual letter has been anything but ordinary. In my opinion, it's one of the best letters he has ever written. Not just because of the emotional tone regarding the late Charlie Munger, but also because of the sincerity he has shown towards all his investors and followers regarding the future of Berkshire Hathaway. Buffett begins the letter with heartfelt words of gratitude towards Charlie Munger, which I believe are essential to highlight. In reality, Munger was the architect of the current Berkshire Hathaway, and I acted as the general contractor to carry out the daily construction of his vision. In these words, Buffett demonstrates his humility as an investor. If you know a bit about Berkshire Hathaway's history, you'll know that Munger turned Buffett into the greatest investor of all time by expanding his investment style, which was deeply rooted in deep value principles introduced by Benjamin Graham. Initially, Buffett focused on simply buying cheap businesses without considering their quality. However, it was Munger who influenced Buffett to understand that buying cheap didn't guarantee investment success. Instead, if he wanted to consistently achieve success and generate extraordinary returns, he needed to let go of the obsession with buying cheap and focus on buying excellent businesses at a fair price. Buffett has made an important mention of this selection criterion in his letter to Berkshire Hathaway shareholders. Our goal has always been to wholly or partially own businesses that have a good and enduring economics and are run by capable and trustworthy managers. As you know, Warren Buffett has been able to generate extraordinary returns for Berkshire Hathaway shareholders of 20% annually since 1965. This success for its shareholders has been generated from two segments. On one hand, we have the incredible performance of its operating business, in which it has been acquiring private companies from different sectors such as industrial, utilities, energy, or finance. On the other hand, thanks to the investment of all the cash generated by these companies into stocks and bonds, many Berkshire investors wonder what will happen when Buffett is no longer there, as he and Munger have been the architects of the company's operating and investment management. Well, Buffett has said something unprecedented about the company and its future growth. The growth days are far behind us. Size has overwhelmed us. Besides, with the increase in competition for acquisitions, there are now only a handful of companies in this country capable of truly moving Berkshire's needle, and I must say that they have already been thoroughly examined by us and others. Outside the United States, there are no candidates that are significant options for Berkshire's capital deployment. In summary, we have no chance of producing another astonishing increment. If any other CEO had made such disappointing statements about the future growth of Berkshire's operating business, I assure you that its stock would have plummeted the next day, at least 20%. But in Buffett's case, that didn't happen, once again showing the honesty of this investor towards his shareholders. Without a doubt, this is a huge wake-up call for its shareholders. But the fact that they cannot grow by making more acquisitions does not mean that Berkshire Hathaway will not be a good investment. As I mentioned, the success of the company lies, of course, in that operating business, but also in its investments. And this is where Buffett is the best investor in the world. Before we move on to Buffett's opinion on the current stock market, let's briefly review his investment portfolio. As we can see, as of the end of 2023, Buffett's portfolio has hardly undergone any significant changes. His portfolio consists of 10 companies with significant weights, including Apple at 50% of the portfolio, followed by Bank of America at 10%, American Express at 8%, and Coca-Cola at 6.8%. The absence of new investments and the historical record in cash accumulation by Berkshire, which now stands at $157.2 billion, leads us to believe that Buffett is not finding interesting stock opportunities or considers the market to be expensive. But let's stop speculating and see what he has said in his letter. Occasionally, the markets and/or the economy will cause the stocks and bonds of even the most outstanding businesses to be surprisingly mispriced. If you think American investors are now more stable than in the past, think back to September 2008. The speed of communication and the wonders of technology facilitate instant global paralysis. Such instant panics will not happen often, but they will happen. Buffett's words are crucial because, reading between the lines, what the super investor is telling us is that there will undoubtedly be moments of great volatility. However, unlike other occasions, he doesn't emphasize that those moments will occur soon or that there is extreme greed in the market, as he has indicated in some previous years. Berkshire's ability to respond immediately to market paralysis with enormous sums of capital and performance certainty can occasionally offer us a large-scale opportunity. Although the stock market is massively larger than in our early years, today's active participants are neither more emotionally stable nor better educated than when I was in school. The markets now exhibit behavior much more akin to a casino than they did when I was young. The casino now resides in many households and tempts occupants daily. Buffett is clear. He will continue to apply his successful strategy, and right now, he simply prefers to be invested in companies that already have a track record, accumulate cash, and wait for that volatility to arrive, as it has historically. And of course, that's when he'll deploy all his capital and take advantage of a market that, although modernized with technology, is, in Buffett's view, just as irrational, if not more so, than it has ever been. In my humble opinion, I believe Buffett's stance in this market is a conservative one and aligns with the strategy he has historically pursued. However, I also believe that, as I've mentioned many times before, we're facing a different market. A market where unconventional monetary policies have changed the rules of the game. Since 2008, there haven't been pronounced economic cycles because if a major recession is perceived to be looming, central banks flood the system with liquidity. At the same time, we are immersed in the greatest technological disruption wave in history, artificial intelligence, which is boosting the growth of many companies by optimizing their costs and consequently expanding their profit margins. But beware, there are many companies clearly benefiting, but there are also others that are likely to disappear. This disruptive wave will sweep away many companies, and although it's benefiting the entire market now, you should review each company you consider investing in. There may be many value traps, so be careful in this regard. In conclusion, I believe that 2024 will be a very good year for the stock market because of all this, and as I mentioned in a previous video, it's an election year in the United States. No candidate is going to leave their presidency with a recession underway. I hope this video has been valuable to you. If you have any doubts about Warren Buffett's letter or any investment-related questions, feel free to leave me a comment, and I'll be happy to respond. Without further ado, I send you a big hug, and I'll see you next week. I think this is the beginning of a great friendship. Subscribe to the channel, and don't forget to activate notifications so you don't miss any of our videos.